Hello, everyone. This is Mohammed Akib with Akib CPA, and today we'll be discussing Canadian departure tax. What it is, what is it levied on? I mean, what kind of assets do you have to pay on, and how is it calculated? So, again, Canadian departure tax. What kind of we'll be going into detail. We'll be talking about what kind of assets that it's levied upon, and then how the basic calculation is on the departure tax. So let's get into detail. So, what is Canadian departure tax? So when you leave Canada and you become a non-resident, technically this is happening when you are leaving Canada for tax purposes, and then you don't have any more primary or secondary ties, and then you're becoming a resident of another country. So essentially, what is happening is that you are deemed to have disposed of certain type of assets at a fair market value on the day you cease to become a resident. So technically, what it's saying is this: the cost when you acquire those assets, and then the fair market value, the difference between if it's gone up, the difference between those two amounts, there will be a departure tax on it, even though you might not have sold it. This is happening on a paper, and that's the reason it is a deemed, not a actual disposition, meaning that it's not really happening. It's only happening on a paper. So it is a tax on assets that you own, and then the tax is on the difference between the cost that you when you acquired those assets versus the fair market value on the day you leave Canada for tax purposes. So this is how the tax is calculated. And you have to pay to CRA for certain assets that you own at the time you stop being a Canadian resident. So I'll talk about what is not included in the departure tax, so what type of assets are not included, and then we can go into some examples of what is included. So what is excluded from the departure tax? So what is not part of the departure tax when you leave Canada? Cash, that's number one. Number two, Canadian real estate. Any Canadian real estate is not included. So that includes your main home, your secondary home, your rental properties. Any of those are not included. Any retirement accounts, which can include RRSP, RESP, TFSAs, RRIFs. These are all accounts. Certain other pension plans. So all the retirement and pension plans are not part of the departure tax. These assets are not part of the departure tax. The taxes are levied on it. Any personal property that is valued less than $10,000 Canadian dollars on the day you move. So any personal property that you're left behind, that you're leaving behind or you're taking with you. So if it has a value of more than 10,000 Canadian dollar on the day you leave. This is more than 10,000. That becomes taxable. If it's less than 10,000, it's not included in the departure tax. Or any property that you owned before becoming a Canadian resident for 16 months or less. That means if you just recently became a Canadian resident, and it has been less than 16 months and you owned it before you became a Canadian resident, you will not have to pay any departure tax on it. This is only for a new resident. So if you were a resident before and then you became a non-resident and then again you became a resident, this does not apply to you. So only applies to new Canadian residents for the first time who come to Canada, who establish themselves, but they leave Canada within 60 months from the day they become Canadian resident. Those properties are not included. And then, so again, number one, cash. Number two, real estate. Number three, retirement plans, which are RRSP, RRIFs, TFSA, RESP, other pension plans. Personal property. Number four is personal property, value less than 10,000, and then any property that you had before you became a resident of Canada, and then you have only lived in Canada for 16 months or less. So these are the properties that are excluded from the departure tax. And what is included? Any stocks that you owned, that you acquired while you were being a resident, your corporations, any local stocks, Uh, what else? So any there are many more. So this is not, and then so any property that you own out overseas will also be part of the departure tax. That's number one. So how is it calculated? The calculation, of course, it is difference between the fair market value and then the cost. Any capital gains will be taxable. So 50% of that capital gain. So for example, you owned an asset, you bought it for $100. You're by the time you're leaving is $200, is 150. The $50 is the capital gain. The $50 out of the $50, of course, 50% will be taxable depending upon where your income is, and then so that's the only amount you'll have to pay tax on. So if you are, I mean, this is if you are leaving Canada and you have certain assets which will be taxable. This is how the calculation is going to work. We have to make sure when you are moving to the U.S. that we do take, if you do have departure tax, if you have deemed disposition on the Canadian side, that we take appropriate elections on the US side. So these are all the people, all the Canadians who are moving to US, who has a departure tax, has paid, has a deemed disposition on certain assets, and are moving on the US side. We do have a tax treaty election that needs to be reported on the US return. So this is very important for Canadians who are moving to the US. If you are paying departure tax, if there's a deemed disposition on an asset that is happening on the Canadian side when you are moving, then there is an election that we are supposed to take on the US side to help you offset any other future gain or loss, future gain whenever you sell this property. All right. So again, departure tax is technically a deemed disposition, meaning that a disposition, a selling of an asset on paper only. It is a deemed, and then that is on, it's on the fair market value minus the cost on the day you leave, on the day you cease to be a resident, and then so that technically it's a capital gain tax that is being levied on you when you leave Canada. Any questions? Shoot us an email at info@keepcpa.com, and we'll be happy to answer any of your questions. Thank you.